All right, Helene, looks like we got the room opened up here for this Thursday's edition of Trade Today Live. Super excited to be here. As always, a lot of things happening in the market, a lot of catalysts moving stocks today. But excited to be here, Helene. How are you?
Good, good. I'm excited to be here too. Still in earnings, still lots of excitement going on, a lot to break down.
Yeah, exactly. Absolutely. Typically you can kind of run into this in Q2 earnings season. You get a lot of chop. Any earnings season brings a lot of chop and a lot of, outsized moves, sometimes some that maybe don't even make that much sense on the surface. But, you're seeing a lot of that, but thus far it's been a good earnings season so far. The actual numbers reported for Q2,
Mhm.
had, very, very high beat rates on both revenue and earnings for the S&P 500 companies. So that's been really encouraging. There were some concerns about tariff overhangs for Q2 earnings and exactly what the impact will be. But by and large, at least particularly with the most important companies for the overall earnings of the S&P 500, it's been a really good earnings season. Not necessarily all the reactions to the reports, but the actual results reported have been really solid. But kind of sifting through all that, seeing the ones that are still performing well, it's definitely nice to have kind of the lion's share of the reports behind us at this point. We still obviously have some to go, and there's certainly some still, some big ones still hanging out there with, Nvidias and Broadcoms and things like that to come a little bit down the road. Those will be coming up over the next couple weeks. But all that said, the majority of the earnings reports are behind us, so that's always good. It's nice to kind of see another earnings report in season, having gone well.
It definitely is a sigh of relief, especially I know as traders that are actively trading directional positions. It's hard to not get a little nervous when earnings season comes around, just because you could have the best stock, it could have the best report, and it could still sell off. And so there's not much you can do with those directionals, with earnings. But of course, there are other plays that you can take, to try to mitigate that risk. But yeah, I definitely am happy to see things have been really positive overall and that we're kind of getting through the thick of it.
Yep, absolutely. So with that, I think we probably ought to go ahead and hop into our first couple charts of the day, Helene. Go ahead and start breaking down just what we're seeing in the charts. Per usual, we always generally like to start off just looking with this 10,000 foot view, of the S&P 500. That's the chart we're looking at right now, folks. This is about a 6 month long chart of the S&P, and have some, important technicals we like to follow, of course, overlaid, just kind of, 10,000 foot view again, technicals just of the market. But Helene, looking at this chart right here, definitely some interesting developments over the past week. A lot of trading action, pretty wide trading range. But other than that, what are you still seeing in this chart, and what should people really be paying attention to?
Yeah, I mean, I'm seeing a lot of overall strength. We had been calling for a while that things were overheated and needed just a short-term pullback. We didn't say, it's going to be a major correction, nothing like that. We just said things are overly heated. We need to see a healthy pullback and then a resumption of the bull trend we would expect. And that's exactly what we've seen over the past, week or so of trading. And so this movement that we've seen where we saw that sell off and then immediately started trending higher, that's a very, very bullish sign, especially in the short term. So overall, feeling really bullish on this positioning. Also, it gives us the time to enter into some new trades as well, since things aren't really overheated yet once again. So really excited about where we are right now, I have to say. How about you,
Exactly. Yeah, I
Shane? What do
couldn't
you
agree with you
think?
more. As we said, you well explained this, but we had been saying that certainly, some type of a small pullback, just a little bit of a breather, allowing some digestion for the market and for investors, was certainly warranted after the run that we had, off of those April lows, roughly through the end of July, and right around when the calendar was starting to turn over at the end of last month, we definitely got it. You can look back on the chart to this bar being just 1 week ago. This was Thursday of last week. We opened that day above 6,400 on the S&P. That's currently the all-time intraday high that the index has ever traded at. So we opened at that high and almost immediately sold right off, and finished, just barely off the lows of the day. That pullback really started getting underway, but As you said, Helene, this week it's been really encouraging. We've seen a lot of buyers come in. There's still, very clearly that buy the dip mentality in this market. And I think that's warranted. As we said, the earnings season thus far, again, has been, very positive with the actual results produced. Again, there's been some negative reactions for some of the stocks, but the actual results have been good. The technicals underlying the market are still rock solid. I mean, you can see the trend lines here just on the index level. Short term, medium term, long term, all the trends are still very firm and still very intact. It was great to have a bit of a pullback because, as you said, this allows for newer entrants into the market. Maybe some people that were kind of lagging on the year were still holding out for a better opportunity to get in. All these things are part of a normal cycle in a healthy bull market. You get these slight pullbacks offering some better entry opportunities. That's exactly what we got. So we got the really steep selling on Friday, dropping almost all the way down to 6,200. So, almost a little more than, about a 200 point pullback on the S&P. But from there, we've had some really constructive buying over the past 4 days, and that continued today. Of course, we're about flat on the day compared to yesterday's close, but we're continuing to bounce back, making that series of higher highs and higher lows. And it looks like that stocks are set up to go and challenge those all-time highs yet again, in the next couple of weeks. Now, with that said, I do think because there's several competing narratives that are kind of out there right now. As we know, Helene, in any bull market, you have to have a wall of worry to climb for those gains to happen, slowly and over
Absolutely.
time. But I think that we probably are due for a little bit of period of that digestion consolidation before ultimately resolving higher and trading higher out of that range. So, if we get, stuck kind of in a sideways market for the next couple of weeks as we're, trying to, grind out a new high and, break out higher, that would not shock me. I think we're kind of set up for that. And in
Mhm.
recent trading, I think suggests we might be in for that. But what do you think? Do you think that's a very likely outcome?
Yeah, I think that's fair to say, and I think you can't ignore seasonality. We are entering into a turbulent time within the market, historically speaking, and so, having the run-up that we've had, it makes me even expect it almost a little bit more because, the market likes a reason to sell off. It does. It looks for that reason. And so I wouldn't be surprised if we see some volatility, some consolidation, some sideways movement, as you said, as we go through the next little bit of time and try to break that new high again.
Exactly. Yep. Another thing too, this is just kind of a, just again, a 10,000 foot view point here to make is that, you start getting later in the summer. This is just kind of just a reaction of just human nature and just our schedule as people. You typically start seeing lower volumes, like actual daily share counts. It's because a lot of the actual people that are still trading at institutions, they're starting to go on vacation. They're making less moves towards the end of summer. This is just an observation that's happened over time, and it's pretty well documented. But because of that low volume trading that happens typically during pockets of the summer, that lower volume can lead to those wider price swings. Just the increased volatility on those low volume trading, that's just one thing that can kind of lead to that seasonality and kind of be one of the reasons why sometimes it plays out.
And
Again, not that it's set in stone that August, September have to be rocky. I mean, we've had
of course not.
August and Septembers that have been great, and people have really missed out. But that's just kind of a structural reason why you can see some of those more volatile swings during this current period is just because people are on vacation and they're not thinking about the market sometimes. So
I
just want
also
to,
think
yeah,
that it's, something that the chart doesn't show, but I know that we're seeing really actively in trading right now is that we're seeing a pretty major rotation.
yeah,
And so, some of those leaders are starting to be either declining or consolidating. And, that could lead to some overall volatility, for the broader indexes as well.
exactly. Yeah, and I think that kind of speaks to what I was talking about earlier, Helene, when I said, there's several kind of competing narratives in the market right now. Like,
Yes.
I still think that, I like to be focusing on the areas that have the strongest relative strength, have been the best performers of late, and are, really showing signs of, positive bullish price action, in the market right now. That's where I'd be looking for shorter term trade opportunities, like I'm going to share here in just a bit. But exactly, as you said, there definitely has been some rotation. You're some of those winners, the momentum has slowed, although, their trends still look really strong. There's some people that are rotating, out of the more cyclical things back into, those, mega cap, growth names, things like that. And then there's other people that are thinking that the better plays are going to be, playing for a September rate cut and some of the more cyclical things there. So, like I said, there's kind of some competing narratives going on in the market. So I think that's why we're seeing some of this chop and consolidation and kind of sideways trading. Which ultimately, one or maybe several of those narratives will end up winning out. But yeah, it's a great point to make, Helene. There's definitely some consolidation and some newer sectors and industries that are starting to show some kind of emerging performance. But yep, that's exactly what we're seeing. So, Helene, anything else here that you wanted to point out
No,
before we go ahead and hop into our trades?
go ahead. I think it's time to hop in trades.
Yeah, let's do it. I know that's what everybody wants to come here. They hear us talking about all this market analysis and overview, but I know they really like to be here for the trades. So let's go ahead
Oh
and
yeah.
hop into them. So, folks, my trade for the day, as I was speaking on earlier, I always, for shorter to medium term trades, I always really like to, of course, use my underlying technical analysis methods. Find, we're trend followers at heart. Find, stocks, whether it's an ETF or stock or whatever it may be, that has a really strong trend underlying the trade. But I also like to focus those areas on the pockets of the market that have very strong relative strength, that are outperforming the market, of late, over, a recent period. And one of those, I've talked about this several times recently, some of the different sectors, if you're just dividing the market up based on sector, of the 11 S&P SPDR spider sectors, only 4 of them have actually had a positive performance over the past month.
Wow.
So one of those, actually the strongest performer over the past month, this might surprise some people, but it's actually been this one right here. It's been the XLU. It's the utility sector ETF. Most people probably would have thought technology. They're actually number 2 in performance over the past month, but XLU is actually our top performer on a sector basis over the past month. So that's where I'm actually focusing right now. And last time we were talking, I was pointing out that XLU has been a really strong performer, but they were squarely in overbought territory. The last time we were together talking was on Tuesday. So that would have been this day right here. You can see it actually pulled back towards the end of Tuesday and finished below the upper Keltner channel there. But when we were live talking, it was trading well outside of that upper Keltner channel band. So, would not have been really the place I would have looked to enter a trade at that time because you can see it, it was projecting that we were likely to have a bit of a pullback, offering a better trade entry opportunity. So that's exactly what happened. You can see XLU in the past couple days. It's still in a very strong bullish uptrend, but it's come in a little bit. It's pulled back, and it's actually trading inside of those Keltner channel bands. It's below the upper band right there. So that is signaling that despite the great bullish trend, it is not currently overbought at current prices. You can see again, we have a very strong technical buy signal going on here in the chart. You see our red line right here. That's our 21-day EMA. That's currently trading above our green line down here, which is our longer-term 63-day EMA. And right here is where the crossover happened, just right here in late April. You can see that the ETF it was trading in a fairly wide range for about call it 5 months right here, 5-6 months. You can see it was kind of stuck between call it 81 and about 72. So it was trading in about a $9 range, which is pretty wide for this ETF. But it finally, coming out of those April lows, finally was able to break out of that range to the upside and has put together some very constructive trading ever since doing that. Of course, I just covered the buy signal. And the signal's continuing to strengthen too, Helene. You can see the distance between our EMAs is widening out. The stock price is currently trading above both of those EMAs. So there's a lot of very encouraging things I'm seeing in the chart here for XLU, with that context of it being one of the strongest relative performers, on a sector basis, over the past month month or two. So, given that it has a great technical trend, it's in a great entry spot, given that it's inside of our Keltner channel bands. This is my trade for today. And the way I'd look to go ahead and trade this one, when I'm generally looking to trade XLU, Helene, we know this from trading it. It often does not carry a lot of time value. It's just kind of intrinsic to just the business they're in, right? It's, their utilities. They generally don't have all that much volatility. So they typically, the options don't typically come with a lot of added time value in those premiums. So, generally we're looking to play this. We're going to try and play the utility space with a directional trade. And that's what I'm going to look at here today. So I honed in on the September 19th option expiration. And I specifically landed on this 81 strike call right here. See, it's currently at current market prices is at 6.4 points. So we'll go ahead and update our calculator here. I was just going to show you the profit potential on this one before I go ahead and place this trade. I was actually going to place this one live here today. I really like this setup. So you can see, looking at our call option purchase calculator tool here, you can see the great profit potentials offered by this trade in the various different hypothetical price change scenarios here. So you can see if XLU were to increase by 5%, would have a little over a 55% return. And then say it had a really big jump up come option expiration. Say if it was up 10%. Come that time, you could see it almost a 123% return would be what's possible at current market prices. Excuse me for this XLU call. So, I'm going to go ahead and take a look at this 81 strike call. I'm going to look to buy to open this option. I'm going to set my limit order just at the current midpoint pricing for the option, which is coming in at 6.4 points. So I'm going to go ahead, put my limit order in there for 6.4. I'm going to buy one contract of that and go ahead and submit it. And I anticipate that's going to get filled pretty quickly. Looked like there was pretty good volume in that one, but we'll watch that order.
Yeah, great
May have
trade
to bump
plan.
it up, 5 cents or more, but that was my trade for today. So I
Looks
thought that would
great.
look pretty strong.
Absolutely. Yeah, that the utility sector has been, outperforming. And as you said, it's in a great entry spot. So love the pick. I'm going to go ahead and jump into my trade. Give me a
Yeah,
second
let's go ahead and see what you have for today. I'm
here.
excited to see what you found. We have this nice pullback in the markets again, offering some really interesting opportunities. So excited
Yeah.
to see what you have.
So I went a different direction than you. I went with a payment platform, XYZ, formerly Square. And, if you are, just going to the coffee shop, wherever, it's more likely than not that you are seeing Square. That's how a lot of these different places are using tap to pay or their payment processing. So it's something that I see every day. And been a great company. I know, like personally, I've seen it and watched it over the years. But as we can see, looking at the chart, it's in a technically great spot for an entry. After having a pretty rough 2025, it bottomed out later than a lot of other stocks, actually in May, as opposed to April, when most stocks did in the market. And since then, it started to recover and broke out of that bearish trend and is on a clear bull trend now. It was actually added to the S&P 500 back in July, which is where we see this major move. And technically speaking, now it is on a confirmed buy signal. I look at the 35-day EMA to confirm the short trend, as well as the 200-day moving average. Ideally, I like to see the 35-day trading above the 200-day moving average. And today we are seeing that movement. The 35-day.
Talk about timing.
Yeah, right. It's 8 cents above the 200-day moving average, confirming that trend. And they're in an awesome position right now. Looking at the Keltner channels, they're trading below that upper Keltner channel after being overbought, technically overbought. They pulled back, bounced off the middle channel, and are trading higher. That's a very bullish sign. It's one that we often are looking for when we're entering bullish positions. So that being said, they report earnings today after hours. So because of that, I'm looking to do a spread, specifically the September 19th spread, the 62.5 and 67.5 strike spread. It currently costs $3.92. I want to be in under 4 points to have a 25% profit potential. So let me go ahead and place this trade with you guys. I'm going to go 395. This is a limit order, and I'm going to go ahead and try to get in here. So I'll keep an eye to see if it gets filled there, but that is my trade of the day. And the great thing about call option debit spreads is that they provide downside protection. So as I said, they have earnings today. That means volatility. It could be a swing higher or lower, but that call option debit spread provides downside protection in case we see that swing lower. I could still profit if the stock is down at option expiration.
Exactly right. And it looks like where the strike is that you sold for that spread, Helene. It looks like that's a little more than 10% in the money. So you
Yeah,
have
all
a
the way down there.
good bit of downside protection on that spread. So that's a great example. Buy signal aside, that's fantastic looking, but that's a really great find there. Taking advantage of that added time premium. It's being carried in those call options just because of the earnings event today. Again,
Mm-hmm.
it's impossible to say, one, what the earnings are going to be, or more importantly, what the stock price and the price action reaction is going to be. It's anybody's guess. Nobody has a crystal ball, right? But that's a really smart, calculated way, to use that added premium in the markets, use it to your benefit, bump up the profit potential of that spread. And it's a nice in the money trade with a nice profit potential. So I love it. And the buy signal too. That's like I said, talk about timing. Today the buy signal triggered. I don't know if
It's
anybody looked
today.
back on the chart the last time that buy signal triggered. Of course, you can't say that that's exactly what's going to happen. But if you look at the last time that buy signal triggered for block right there, massive run up in the stock. So that's a very historically accurate buy signal. It's a great sign, absolutely. So it looks like a great trade you found there, Helene.
Thanks, Blane. Thanks, Blane. Well, I'm going to let you know that I have to run. So I'm going to let you wrap up today, but it's been great being with everyone here. And Blane, I'm going to let you take it away.
Yeah, will do. Yeah, well, great job, Helene. I'll go ahead and wrap things up here for everybody. But folks, first off, just one, I want to thank you all for being here live, joining us for TOD Live for today's call. Always love to have everybody in the room and highly encourage you to be here because, we're finding these trades. We're doing it here live with you. And, sometimes, we have to kind of, call an audible and, change up the trade that we found just before hopping on, just because, markets are moving, option prices change. So always love to have everybody on here, to see us doing this live in action. So I think it's, a really, really good thing to be actually here live in the room. So really encourage you all to keep attending whenever you can. Love to have you in these sessions. But before we go, I did want to go ahead and kind of tease something that's coming up here pretty soon. So Chuck and our team, Helene and myself, we've been working on for quite some time now a really exciting project. We have something coming up. It's actually going to be debuting this next coming week. And you all, since you're some of our really loyal TOD Live subscribers, you're here all the time. Maybe even you're watching the replay later on today. I want to give you all the opportunity to go ahead and sign up just so that you can attend. It's going to be a free session. There's no cost to attend, but the first session is actually going to be this Sunday. Chuck, he decided to have it on Sunday because he knows everybody's going to be home and he doesn't want folks to miss out on this. But what it is, it's a strategy. It's a brand new one we've been working on for some time. We've been really honing it in, sharpening the edge of this. But what it is, it's going to be a strategy that targets an everyday trade. They're very, very low cost. In fact, they're actually coming in. The average cost is only about a couple $100, on average. So it's a really unique strategy. This thing it provides you a trade alert every single day, really low cost. And they've actually been hitting it about an 80% win rate. So it's been really exciting. It's a nice high frequency strategy. It's very different from anything that we've done previously. So I actually posted that link in the chat, folks. So if you want to go ahead, or you just go get signed up for it. It's going to ask your email just so you can receive the link when Chuck goes live this Sunday evening to talk about it. I promise you're going to be really excited to hear about what this new trading strategy is that we've developed. And in fact, it's actually a trading tool that you can get your hands on that will help you show exactly how we look to target the strategy. So that link's in the chat. Highly encourage you all to go ahead and click that, check it out, get signed up. So you can be in attendance for that strategy, or there actually will probably be several subsequent presentations too. But I just want to make sure that you have that available to you. That link's in the chat. Highly encourage you to go check it out. But with all that, Would love to see you there. But again, thank you all so much for being here live today on, excuse me, I need to drink some coffee. My throat's getting dry. Thank you all so much for being here for today's Trade of the Day Live. Really appreciate you all being here. Again, we love having these live sessions. We hope you find them useful. Hope you enjoy them. And we'll be back here next week. We'll be live on Tuesday. It'll be the next TOD Live. So encourage you to attend then if you're available. But until then, hope you all have a fantastic rest of your week. Enjoy the weekend, and we'll see you all back here soon.